Hello Wolfpack, we're going to be comparing some possibilities here regarding the Bitcoin macro bottom. Now Bitcoin is in a bear market, we all know this, that's common knowledge, right? If you don't know Bitcoin's in a bear market by now, I don't know what chart you're looking at. And I don't think many people do believe that. I think the vast majority of people in the market are bearish, and so that's fine. I mean, we've done some polls on the Wolves Crypto YouTube channel. We've done about 3 polls in the last 3 weeks. We do a weekly poll. And out of my viewer base, at least, and I know it's not an accurate demonstration of the entire cryptocurrency space, but out of my viewer base, at least, we've got about an 80% bearish kind of referendum there. So 80% of people are bearish, 80% of people are bearish in the sense that they don't believe the bottom is in, and 20% of people do believe the bottom is in. Now, I want to be bringing up some stuff. I talked about this quite a bit in yesterday's video. Now, I personally do not think the bottom is in. I'm not convinced that the bottom is in. Now, whether or not I think it is kind of different. I'm not convinced, right? It's not something I'm convinced by. I'm not looking at the current prices right now, and I'm not looking at the evidence that's around the current prices, and I'm not looking at that and being like, all right, yeah, well, that's an obvious bottom. In the same way that I was looking at the charts in November 2021 at 66K and thinking that's a pretty obvious top. I think that finding the bottom, and at least finding this bottom, is going to be significantly harder given the macro undertones, given what's going on with the global economy, given what's going on with Bitcoin in relation to 4-year cycle theory. The top was very easy to predict in 2021. I know a lot of people are going to, push back on that a little bit, and I think that's fine. You can push back on that if you want, but I still stand by that point. The top in 2021 was quite easy to predict, right? We had the 4-year cycle theory predicting it to the end, basically to the T. As you can see, the 4-year cycle theory, the 4-year cycle trend is a date range trend, predicted it to the T, to the same very day. In fact, between the 2014 bull market and the 2018 bull market, or 2017 and 2013, sorry, we saw 1,064 days exactly from the bear market bottom to the market top. We saw the exact same amount of days, 1,064 days from the 2018 bottom to the 2021 top, right? It was predicted by a date range trend. And that's only one of the date range trends it was predicted by. It was very, very, very easy to catch. This bear market bottom is not going to be so easy to catch. And I think that, people and people on crypto Twitter and people on crypto YouTube are somewhat underestimating how complicated it is to find a direct bottom on Bitcoin, and understating the importance of finding the trend reversal rather than the bottom. But knowing all of this, and getting into the video a bit, knowing all of this, I think it is of utmost importance that we try our best to compare the arguments. Because to me, and to me personally, and I think a lot of people would agree with me on this, and I think a lot of even the big accounts would agree with me on this, who typically get things wrong, there are 2 scenarios for Bitcoin. Either Bitcoin has bottomed out, or will bottom out very soon. So let's just say Bitcoin will either bottom out in July, or Bitcoin will bottom out in Q4, a bit more of a vague period as per the 4-year cycle theory. So basically, it's either bottomed out right now, or it's going to bottom out very, very, very soon, right? At around these prices, at around what we saw at the bottom at 17.5K or 17.8K, whatever it was, 18K, let's just say, right? So it's either bottomed out at 18K, or it's going to bottom out this month, or we're going to see that Q4 bottom. Those are the 2 separate camps people are in right now. It's like, well, if you think we've bottomed out already, you're probably bullish, or you probably think you're going to be bullish by the end of the month because the bottom will be placed by the end of the month. That's the July camp. So the July bottom camp, that's one group of people. And that's where a lot of the population of cryptocurrency lies. And then the rest would say, Q4 is going to be the bottom as per the 4-year cycle theory and as per the macro situation, as the macro situation will probably be looking a little bit better, or at least reversing by Q4, and hence that would give the market breathing space for a bottom. Those are the 2 camps. And then there's a very small percentage of the crypto population who lies outside of his camps and says that, they think we're going to go to 3K and think Bitcoin's dead, right? I don't think Bitcoin's dead. I would kind of lean more towards the Q4 camp, but I'm going to be looking at the analysis anyway, because I think, I've made this abundantly clear on my channel multiple times. I'm not like 100% confident in my predictions to the bottom, not because I'm not confident in myself and confident in my ability, but I simply don't think we have enough evidence, right? I just think the evidence is too fragile, and I don't think we have enough of it. And given the macro situation, how much uncertainty is resting on the Fed's decision, I think it's going to be very, very hard to predict. But yeah, Q4 is where I'm leaning to. So without further ado, let's get into the analysis here. And let's start off with the July camp. So we're going to be analyzing, well, what is the evidence for supporting a July bottom, and what is the evidence that's supporting a Q4 bottom? So the July argument, the July pitch. Well, Bitcoin's going to bottom in July. This is the argument we're looking at right now. Okay, so what is the supporting evidence for the argument? And then we're going to go ahead and critique it after, and then we're going to do the Q4 argument, critique of the Q4 argument, and then we're going to be doing an analysis at the end to determine which one is most likely, right? So this is the evidence that I can confidently depict, as the main points of interest for the proponents of the Q3 or the July bottom argument, right? So this is these are the main pieces of evidence. Now there's other pieces of evidence for sure, but these are the main ones. These are the strongest pieces and the most convincing pieces. So firstly, okay, the macro uptrending line, a 7-year uptrending line on Bitcoin, this yellow macro uptrending line going through the entire history of Bitcoin. That is one of the main pieces of evidence. In fact, that is the main piece of evidence that I would say is indicative of a potential bottom in July or a bottom already, right? We're at the bottom basically, according to this. And this macro uptrending line was tested for support during the 2015 bear market. It was tested for support during the COVID drop. Interestingly, it wasn't tested during the 2018 bear market, which is when we saw the actual price bottom. So it isn't really a line that's necessarily indicative of when exactly the price point bottom is, but it is a support line that's been retested on multiple occasions nevertheless. We also have, I'm going to delete this green box because it's not relevant to the analysis right now. We also have seen, in addition to these 2 retests, a strong retest right now, and a very, very lengthy retest in comparison to these last 2 retests, right? We're holding this line. This line's currently sitting at around 18K. And so provided we rest above 18K on Bitcoin, you can't be overly bearish. And this is something that I say, even though I think the Q4 argument is slightly stronger, I still say, provided we're holding this macro uptrending line, and please quote me on this, right? Because it's very much true. Provided we're holding this macro uptrending line, right, above 18K, okay, you cannot, logically speaking, be overly bearish because you are betting against a macro trend, right? Obviously, the main macro trend is a 4-year cycle theory, but this, nevertheless, is still a macro trend line. And so, again, so long as we're above 18K, we're holding this macro line. And we can see that one critique of this, and actually we'll look into that after, but this is the kind of situation we're in right now. This is the situation people are putting themselves in, where they're looking at the market. They're looking at how, Bitcoin's dropped down. Basically, it had the worst month in Bitcoin's history, a negative 40% month in the month of June. Worst month in Bitcoin's history. Another piece of evidence would be we're at the most oversold level on the RSI that we have ever been on Bitcoin, right? They're looking at these 2 pieces of evidence. They're thinking, all right, so Bitcoin is essentially oversold going into support. And a technical analysis brain, right? Someone who's interested in technical analysis, they know a lot about technical analysis. If something is oversold going to support, if something has seen the worst month in its history while the fundamentals have remained relatively similar going into a macro support zone, it is anything but illogical. It's very logical to think we're going to bounce off this support zone. And I completely and utterly agree with that. However, there are some critiques that we need to make in a second. Now, moving forward, another indication that we might be heading towards the bottom in July, or potentially might even be bottomed already, is obviously the Pi cycle top and bottom indicator. For those of you who aren't super familiar with the Pi cycle top and bottom indicator, I'm not going to get into it too much because it is rather complicated for no reason. I don't need to explain it to you. All I need to say to you is that it is basically various MAs, various moving averages, that when they interact with each other and when the price interacts with them, it predicts whether, when Bitcoin's going to top in rough price regions in rough periods of times, or when it's going to bottom in rough price regions in rough periods of times. So we have Pi cycle high, those are like bull market tops, and then Pi cycle low and Pi cycle low. It's been relatively accurate in the past. However, I would be careful about trusting this too much. We're going to get into a critique in a second. And it does kind of suggest that Bitcoin's getting very, very, very close to a bottom at this point. Another thing we need to look at, and this is the third and last piece of evidence for the July bottom, in my opinion, would be the CBBI indicator. You can find it on Google by just typing up CBBI. It will come up straight away, CBBI Bitcoin. Essentially, you would have seen it. It's kind of like various on-chain. It's kind of like, well, what do we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 various on-chain charts that are kind of used in accumulation with each other, all together compacted and put into one indicator. And you can see that there's this blue kind of line here, and it's the CBBI confidence line. And when this reaches a very low level, it means that it's a very high percentage chance that the bottom is in. And when it reaches a very high level on a scale of 1 to 100, it means there's a very high chance the top is in. Now, this predicted the top in 2013 and 2017 to the day. And it also roughly predicted both the bottoms in previous bear markets. It didn't predict, however, the bull market top. Okay, and this is where we can get into critiques. All right, so starting with this macro uptrending line, these are my critiques of the July bottom theory. First of all, this macro uptrending line, when you start to rely on macro uptrending lines, you need to look at the ultimate macro uptrending line. That's the 200-week SMA. This is the macro uptrending moving average that is very, very well tested, much more well tested than this yellow macro uptrending line that all of the people who believes in July bottom are relying on. This was tested for about 16 months of consecutive retests in Bitcoin's entire history, and not once other than the last month did we close more than 2 consecutive weekly candles below it. That was the ultimate macro uptrending line, right? We lost the ultimate macro uptrending line, so who's to say we can't lose a lesser one? That's kind of the argument there. Now, another argument for kind of, well, you know, another critique of the July bottom theory, I guess you could say, is that the pi cycle top and pi cycle bottom indicator is, I mean, it's triggering that we're coming towards the low, but it's extremely rough. It's an extremely rough estimator of where the tops and bottoms will be. In fact, it gives you kind of like month time frames of where the bottom and top can be, even more in most cases. And if you're looking at something like in 2013, you can see it actually triggered a bull market top on 2 separate occasions, and obviously there's only one bull market top. So yeah, it's extremely rough, and hence it's extremely unreliable in predicting exact dates. And if we're looking at when Q4 is only 3 months away, in fact less than 3 months away. And so when you're saying that, you know, we're using the pi cycle bottom indicator to predict the bottom, but then you're also taking into account it has a very, very rough kind of guideline of when the top and bottom will be, you have to kind of understand that it might actually spill into the Q4 prediction, and what you think might be an indicator for a July bottom might just be an indicator for a bottom anytime in the next few months, which might spill into Q4, right? Another thing we need to look at is the CBBI. Now, you guys know my thoughts on on-chain data, and I actually do have a criticism about the CBBI itself, even though it seems to be incredibly accurate. My first criticism is that they've actually removed a couple of the on-chain metrics here. There used to be 10, now there's only, there used to be 12, now there's only 10. They've removed a couple of them because they don't work. So they're editing the data to make it seem better. And then another criticism of mine would be, well, if it didn't predict the bull market top in 2021, how do we expect it to predict the bull market bottom in 2022? Right? That's another kind of thing I would say there. And also, something that I would say about the entire July bottom hypothesis is the fact that we're not in unique time. We're not in normal times for Bitcoin anymore. And so when we're relying on regular things that generally work for Bitcoin in normal macroeconomic times, we're in a recession right now. When we're relying on data that only works when we're not in recession, only has worked when we're not in recession, it's not logical. It takes away from the point. The point is we're in a unique time, and so unique things are going to happen. The CBBI might be invalidated. This macro uptrending line that has only been held during normal macroeconomic times might be lost due to a recession. And so there are multiple criticisms we can be making about these July bottom predictions, although it might look great according to the TA. And if I was a firm and 100% strict believer in TA over macroeconomics, then I would probably say that it is more likely that the bottom is in July here. However, taking into account the macroeconomic situation, we can understand that it seems the Q4 bottom might be a little bit more likely. And this is where we come into the Q4 bottom argument. So now the evidence for a Q4 bottom, which is obviously my favorite prediction. The first thing I'm going to be looking at here, and this is actually the exact chart I used to predict, not the exact chart, I've changed it up a little bit, but the exact trend, kind of date range trend that I used to predict the 2021 top, obviously in coordination with short-term TA. This is the 4-year cycle trend, and the 4-year cycle is a date range trend. I don't want to get into it too much, but you guys need to understand the general principles of it. It's caused by the halving. Bitcoin has a halving every 4 years. The halving every 4 years kicks off a unique 4-year cycle. Within the 4-year cycle, there is 1 year of bull market, 1 year of bear market, and 2 years of accumulation, making 4 years. That has occurred 3 separate times on Bitcoin, and it has repeated the same pattern 3 separate times, in which we've seen 3 separate bull markets, 3 separate bear markets, and I think 4 years of accumulation total, going on 6 years at the end of this cycle. So, 4-year cycle trends happen 3 times. You need 3 times in order to make data points into a connected trend. That has happened 3 times. It's happening. It's in the process of completing its 3rd kind of data point. We can start to take this very seriously now. And this date range trend has some very interesting date range kind of predictions and projections you can make with extrapolation of data. First and foremost, we have in these color-coded boxes here, these color-coded writings here, we have 1,400 days from top to top, 1,400 days from bottom to bottom, 400 days roughly from top to bottom, and 1,064 days exactly from bottom to top. And extrapolating that into the future, we can make predictions about where the prices will be, and most importantly, where the date ranges will be in future bull markets and bear markets. You know, again, this is a date range trend. We're not necessarily using it to predict price points exactly. We're more using it to predict date ranges. And so if this trend continues, we can see that we've got a kind of very good schedule for Bitcoin in which we'll be topping out in October 2025 and then bottoming out in the next bear market in October 2026. But ultimately, this date range trend is suggesting that we see a bottom in Q4 this year, right? It's not precise enough. There hasn't been enough data points for us to nail it down anything more than that. We would be seeing a bottom in Q4. We can't bring it any closer. We've got a 3-month period between October and December. We need to be looking out for the most likely bottom. And the thing I would encourage people to understand about this kind of thing, this kind of chart, is that it's not by itself, right? TA, and it's hard for people to understand, but the 4-year cycle on Bitcoin is heavily connected inherently to the traditional markets, okay? And so it's not a coincidence that it looks as though the traditional markets will be getting better by Q4. It's not a coincidence at all. What we can see on traditional markets right now, and this is going into the second point, is a sharp recession. We're seeing bond yields skyrocketing, right? And obviously this recession is triggered by interest rates rising, of course, as all recessions generally are, and interest rates rising are triggered by high inflation, and high inflation is triggered by overspending and bad economic management or just general unfortunate economic situations. And COVID was one of those in which, you know, overspending and bad economic management exacerbated the problem. But essentially, poor economic times, you generally see bond yields rising as the government kind of accepts that the risk is very high right now and they give higher returns in their bonds, so people still invest in bonds, which is essentially investing in the government, right? So we see bond yields skyrocketing. Bond yields have reached levels this is the 2-year bond yield, reached levels we have not seen since November 2018. Interest rates are currently at 1.75%. And in November 2018, which is where the bond yields have reached levels of, we saw interest rates up here, or roughly up here, at around 2.5%, which means that interest rates right now are undervalued as per the historical evidence by a ratio of about 75 basis points, meaning that we need to be seeing at least a 75 basis point hike in the near future for interest rates to catch up to the bond yield. So right now, it's kind of hard to say, but bond yield, well, it's hard to articulate, I should say. Bond yields predict where interest rates go if the Federal Reserve is to act in a manner in which they historically have acted. And assuming they're going to do that, and which they are doing right now, we should be seeing more rate hikes in the future still. And interest rates should actually be up here at around 2.5% as predicted by the market, which means the market is predicting and the market is saying that we need another 75 basis point hike in the near future. The next interest rates decision will be taking place on the 28th of July, and hence it is very likely we'll be seeing a 75 basis point hike in July as well. And so with that in mind, and with the fact that we've only ever seen one 75 basis point hike in the last 28 years, and that was the last month, it is unlikely that the market correction on the traditional markets will slow down, at least for the next 2 or 3 months. And guess what? In the next 2 or 3 months, we'll be heading into Q4, and that would be abiding by the 4-year cycle theory and abiding by the Q4 bottom theory, meaning that the traditional markets probably have a few more months of blood, and then they can start to bottom out, in which case Bitcoin would start to bottom out with traditional markets and also in accordance with the 4-year cycle theory. Now, where would Bitcoin bottom out, and where's the evidence about that? Well, I guess you could say one more piece of evidence for the 4-year cycle theory and the Q4 bottom is that Bitcoin hasn't seen a typical correction that it usually sees, and this is even taking into account diminishing returns. Some people would say that diminishing returns is a massive thing on Bitcoin. Of course it is. Of course diminishing returns is a massive thing on Bitcoin. But we don't have much evidence to prove that diminishing returns is a massive thing on Bitcoin during a bear market. We have evidence to suggest that diminishing returns during a bull market takes a massive effect. But, you know, for example, in 2014 bear market, we saw an 86% correction on Bitcoin from top to the bottom. In 2018, we saw an 84% correction. So only a 2% difference there. And as of right now, we've already seen 73%. And with the evidence proposed by the 4-year cycle theory, and with my prediction of a bottom at around 11 to 14k, that would take us to that 80% mark, right? And if we went down to even 11k, that would take us to that 83% mark, and 14k would be that 80% mark. And that would make a lot more sense if we've got 80, 86, 84, and then 80 or 82, rather than 86, 84, and then 73. I know that's kind of just blind speculation. It doesn't have really much of a basis in any mathematical form of TA at all. But it is worth it. It just makes a lot of sense, right? I think that's what a lot of this argument is, what a lot of the 4-year cycle argument is. And the fact that I have to resort to arguments looking at 2 data points about how much Bitcoin has corrected in the past really does show you how uncertain I am and how uncertain most analysts should be. Because even though we can make these assumptions that, hey, the Q4 bottom looks stronger than the July bottom, it's based on a very, very small, easily manipulated piece of data that the Federal Reserve could just rip away. And that's kind of my criticism with the 4 years, with the Q4 bottom, right? So my criticism with the July bottom was that, well, the macro situation's bad and things are happening now that haven't happened before, and so we can't use the data we used before, right? My criticism of the 4 years of the Q4 bottom is that the Federal Reserve could realistically react in any way they want, right? No one was expecting the Federal Reserve to keep interest rates at 0.25% for as long as they did, even though inflation was soaring. They did that. If they act irrationally again, they could easily throw off this entire Q4 bottom prediction. But assuming the Federal Reserve acts as they have historically acted, I would still say that a Q4 bottom is more likely, but I would say that very cautiously. And with that said, I would still say that even though you might think a Q4 bottom is more likely like I do, you still shouldn't be overly bearish on Bitcoin until we lose this macro uptrending line. That is the line you should be looking at on Bitcoin. So without further ado, I'll end the video there. Thanks for watching, guys. I do want to look at a few things before we actually cut it off though, and that is Wolves Crypto V.I.P, BitGet Exchange, and the Crypto Academy. If you enjoy the content that I've provided you for free here today, I highly recommend, and I would highly appreciate it if you stick around for these quick little shameless plugs. If you go to my YouTube channel, on the homepage, you should see a join button on PC. Click the join button and you can see all of the things you'll gain access to if you join the VIP membership for a price of $28 USD a month. Altcoin Trading Signals, Prioritized reply to comments, 2-hour video on market psychology, access to my trading view charts, exclusive emojis and badges to show off in the chats and comment sections. You're not going to get much better than that. We're pulling insane amounts of profits on Altcoin Trading Signals. In fact, Ren USD, the other day, just yesterday, actually popped off 36% profit in just one singular day for the VIP members there. Had a few people messaging me saying how much money they made there, which is great to see. We use BitGet for the Wolves Crypto VIP, and you can sign up to BitGet using my referral link in the description below. That supports the channel. It also takes like literally 2 minutes, and you'll get access to an exchange that has lower fees than Binance and a non-KYC options available, as well as a reward center in which you can earn up to 4,000 USD. I say up to 4,000 USD for doing some tasks that honestly aren't super hard, or at least a lot of them aren't super hard. So you're literally getting access to free money, and you're getting access to an exchange that has half the fees of Binance, which is commonly referred to as the lowest fees exchange in the world. So I'd highly recommend you check out BitGet. That's my personal exchange. If you're looking for an exchange, use that. Sign up with my referral link. And then lastly, we're looking at the Crypto Academy. Crypto Academy is a course made by myself and Mega Crypto, 10-unit course teaching people like yourself, whoever you are watching this video, how to become a trader, how to trade cryptocurrency. What is crypto fundamentals, technical analysis? This is mainly a technical analysis course, but we also dive into market mindset, market psychology. We've recently filmed a video which explains what the course is in depth. And shows you some slides and shows you some of the components of the course so you guys can actually see it before you purchase. If you want access to that video, you can email us here at cryptoacademycourse@gmail.com and we'll send it to you free of charge just so you can check it out and make an informed decision. I'm excited to hear from some of you guys there about that, and also I'll end the video there. Thanks for watching. Hope you enjoyed. Catch you in the next one. Cheers.